The Apartment Gurus podcast is brought to you by Greenlight Equity Group, an apartment acquisitions and holdings firm co-founded by Carl York and Tate Siemer, host of this show. We offer you the opportunity to be an owner of cash-flowing, wealth-growing apartments without the headaches of being a landlord. These assets are recession-resistant, risk-mitigated, offer significant tax advantages, and are a great alternative to the stock market. Ready to check it out? Go to www.investwithgreenlight.com today to book a personal consultation with Carl or Tate. Again, that's investwithgreenlight.com. We look forward to meeting you. Welcome to The Apartment Gurus, where twice a week, host Tate Siemer brings you deep dive interviews with the wisest gurus in the apartment investing industry. These experts are sure to create game-changing value and inspiration designed to catapult your business to the next level. Be sure to reach out to Tate at www.investwithgreenlight.com for access to his investor portal and Calendly link. And now, here is Tate Siemer and the Apartment Gurus.
Welcome, everybody, back to the Apartment Gurus podcast. Just thrilled that you made some time today. And this is going to be worth it because we are going to be talking about a concept in real estate that I will just about promise none of you have heard about yet and is super sexy. And I promise that we will deliver on that today. I've got my friend Marcelo Valdez on the show from again, my Raise Masters mastermind that I'm a member of. And by the way, masterminds are where it's at, guys. We need to talk. If you're serious about this business, you should be in a paid mastermind with high level coaches and colleagues. And your network is your net worth. That's all I'm going to say. I've said it. We've talked about it a lot. We've had a lot of great Raise Masters guests, and Raise Masters over 400 capital raisers that are in a lot of cases raising millions of dollars a month. And so you're in the company of elite, high level, high output, highly productive, successful people, and man, does that elevate your game. So Marcelo, dude, welcome to the Apartment Gurus.
Hi, thank you very much. I really appreciate it.
Yeah, it's great to have you. Great to have you. So let's just jump right in on give us a little of your backstory. You're in San Diego, right?
Correct. I'm in San Diego.
Yeah. So you work inside of your market. So you're one of those rare birds that invest in California.
I am. I have thick skin and wear a fireproof suit and whatever else. Get out there with the sharks with the laser beams on their head and whatever. It's a crazy market because a lot of these West Coast markets are, they're a challenge to work in, but they're worth it if you can make it happen.
San Diego was where I was born, as a matter of fact. Oh. I really grew up in Cincinnati. I lived in San Diego for less than a year old, and mom and dad my dad was in the Navy on Coronado Island, and that's where I was born. And cool. May 10th, 1973, I just turned 50.
All right. Congrats.
There you go. Listeners, all about me now. You can Google that. Whatever. So thank you, Marcel. I appreciate the congrats. It's weird, man. Being 50, turning 50 was a weird, trippy one for me. It feels pretty surreal.
Yeah.
I don't feel 50. So tell us a little bit about your real estate story, your business story. And then I can't wait for the listeners to hear about what you're up to these days.
Yeah, great. Okay. So I'll jump in quickly. Trying to do this in a minute, but so how I got to San Diego.
Take your time. Take your time.
How I got to San Diego was in the military. So your dad was in the Navy. Yep. I won't hold that against him. I was in the Marine Corps. Just joking. I actually went to the Naval Academy. So got tons of Navy buddies.
Nice.
So anyway, I got out here I'm not even going to say when. You're talking about age.
Marcelo, I'm sorry. I need to interrupt you. I would be totally remiss if I didn't stop and thank you for your service in all seriousness and from everybody listening on behalf of them and me. Thank you, sir. Appreciate you.
Oh, absolutely. No, yes. I'm humble. Thank you.
Yeah.
So I came out as kind of a funny day. I'll give you a little indication of my age. I first got out here when just in time to be involved in the Gulf War. It was kind of crazy.
Oh,
I mean,
wow.
literally, they're like, I arrived and loaded up and headed out. So that's been a while back.
91, right?
It was 90. Yeah.
90,
yeah.
Yep.
And so it's been a while. And then I did different deployments and whatnot, went to Okinawa and different things. And so, of course, being in San Diego, they said, well, it's time for you to get out. And I said, okay, or move somewhere else, right? And I said, well, I don't want to leave San Diego. At that time, they were doing all of the base realignment and closure and all of that. So I went into the reserves, and I also went to graduate school here in San Diego. And also, I did a dual degree program in Monterrey, Mexico. So I got out of that, and then I went to work for a company called, you might have heard of it, called Qualcomm here in San Diego.
Oh, yeah. Yep. Qualcomm Stadium. Qualcomm was originally telecom?
Telecom.
Yeah.
It's a telecom company, and they do a few things, but now the main driver is chips. But big company, I went and I actually did 2 overseas assignments, Brazil and the UK, met my wife in Brazil. So it was great. But you kind of do that and you go through a lot of weird things where you have a lot of transitions and whatnot. And bottom line, I was eventually laid off, and that happens in the tech industry. So my focus in terms of going to investors is a lot towards tech investors, because it can be one of those things where companies will sweep people up, and then all of a sudden things happen and they have to kind of flush a lot of folks out, and then they'll kind of go through another cycle again. So it's very cyclical in that way. But it was great experience. And then I decided to go strike out on my own. And I had always been doing real estate on the side. I'm an engineer by training, so I did some building. I got my contractor's license and did a number of different things through all of that over the last 10 years. And then probably about 4 or 5 years ago, I realized how difficult it was getting to find projects that were on market. So I learned about what some people call wholesaling, which is basically just finding off-market deals and assigning them. So I decided that I was going to get good at finding off-market deals here in my local, again, always in my local market.
Yeah.
So
were you primarily single-family space at this point?
Correct. Probably 90, I'd say about 90%.
Okay.
A little bit of multifamily and a little bit of land. So, but probably a good 90% is single family. Mm-hmm. And then
what year was this? Time-wise?
This would have been 2016 or so, something like that.
So market's starting to fire up pretty good at that point.
Yeah, exactly. We've kind of gone through that dip and things start to head up, and all of a sudden all kinds of people are getting back into the marketplace. And it was I just like, wow, this is kind of hard to find projects. And I actually thought for a while that actually just doing only wholesaling, and I did only wholesaling for a few years. And that was one profitable, but it was also really good for me to hone my skills there. But I had always been interested in building and developing and all of that. And so I had actually gone through a period where I would take different properties to the city and I would say, oh, hey, I'm really excited about this. And at the time they called it over the counter because it was literally, now it's all virtual, but literally you would go and there are these old school development services guys, and you pick a number and you'd sit there and wait for whatever, an hour. And then you'd sit down and say, okay, hey, here's the address and here's a project that I'm interested in. And the first thing they would say is, can you park it? And I was like, that's a verb? What do you mean? And they said, oh yeah, well, you have to get parking for anything you're going to build. And I soon realized, oh no, there would be some projects where they would require 1.5 parking spots per bedroom. Yeah. So if you wanted a 2-bedroom addition, not addition, but build something that was, let's say 3 bedrooms, something, all of a sudden you're like, oh, I can't build anything because I can't get the parking.
Wow.
So they started coming along with this thing of the accessory dwelling units. And I started to get very interested in that. But even then there were iterations where they still had parking requirements and things were still a bit of a challenge. And then now I'm going to cut to the chase to sort of what I'm doing today, is basically about 2 years ago, the city said, and I like to talk about the state of California. So what happened is the state of California said, we're going to allow in single family zones for anybody, as long as you have enough of a lot, right? We're going to allow you to essentially convert a garage or space or interior space to the house. That's called a JADU, Junior Accessory Dwelling Unit, up to 500 square feet. And then you can also additionally build a whole other unit up to 1,200 square feet.
Wow.
And that's the accessory dwelling unit. And people call this the granny flat law and granny flats and whatever. And so that was basically the floor. But the state of California said, well, we're not going to interfere if you want to try and do more. So the city came along again about 2 or 3 years ago, and they said, we're going to do this. That's our floor. If you want to do bonus affordable housing, or excuse me, if you want to do affordable housing, then we'll provide a bonus. So you've got your base. And then if you want to build one affordable unit, then you get a free market rate unit, free in terms of just, the density and everything. And as long as you don't exceed the floor area ratio, you can just keep going. So we have projects right now where we have a single family where we're building a 4-plex, a duplex where we're building a 10-plex, a single family where we're building 7 units. Wow. And in as much as possible, we try and provide some additional parking, but it's not required. So, we have such a crisis here of housing, and it's, we're just, we'll literally never be able to build enough. Right. So I don't look at it as even any other people that are doing what I'm doing in my market as even competition, because there's just no way any of us can do enough to ever meet the demand. So we do our best, and it's probably 15 to 20% of the demand can be met through these accessory dwelling units, which I just call backyard apartments for short. Yeah.
That's so cool. So do you know of anywhere else anywhere in the world that's doing this?
So there are other jurisdictions all around the country that allow for accessory dwelling units, but typically it's that same thing. It's the one unit.
It's the single,
It's the single unit in the backyard. There might be one other jurisdiction up around LA that allows 2, I think in multifamily zoning. They're essentially, as far as I know, in the entire United States, and definitely nowhere else in the state of California are they doing this. So I think we're leaders in this concept. And I think eventually, first it'll be other places in the state of California, and then other jurisdictions along the West Coast, and then probably east. Because, I was talking to somebody in Phoenix, and he said, geez, I wish we could do this in Phoenix.
Right.
Because even though Phoenix is flat, it's desert, it's all of that, but a lot of people live in the metro core of Phoenix. And, where I grew up in Houston, I'm from Texas, and we actually lived in kind of what would be considered this concept. And this is something I'm very passionate about. My dad lived and we had the main house was a 2-story home, and the back half of the upper floor was converted into a 1-bedroom apartment. And then on the alley, there was a garage and then a garage apartment above it. So for me, as a kid, I was like in middle school, and what I guess there we call it junior high, but it was really cool. There was the tenants there were all, very eclectic. They were like getting their PhD or their master's at University of Houston. So it was a real great experience for me. And then later, my dad was able, between Social Security and that, he was able to retire comfortably. So this applies for investors who are looking to invest, but also just, mom and pop. Maybe like my house, I could put 2 and 3 units in the back of my yard and kind of be like my dad, And so I want to spread the word, not just for your more professional investors, but for folks that, they just want to be able to take advantage and have their mother-in-law or extended family live in the units, or also to be able to rent them out.
Yeah. I live in the perfect place for this. And I'm in Salt Lake City. In fact, for those of you watching on YouTube, you'll want to tune in and check this out. This is what technology can do for you. But I am in, let's see, where's the one I want to use? Well, that's snowy. Okay, that's Salt Lake City in the background there.
Beautiful.
And okay, so check it out. This is actually really a good thing it's a good illustration that you can see the mountains are literally right up against the city. The valley is full of people. They've built all the way up to the mountain benches and on the mountain benches. And what you can't see is that's the Wasatch Mountains there. Across the valley are the Ochre Mountains. And that's the other side of the valley that constrains growth. So we're booming. Like, and we can't build fast enough. We can't meet the demand. We've got great jobs. We've got the tech industries doing really well. We've got this area called Silicon Slopes that's just full of app developers and, tech names that you would know, household names that you would know have headquarters there. Anyway,
and Californians, which I'm sure you guys love.
Oh, we get tons of Californians out here. Yeah, I mean,
and I know you guys love us Californians.
Well, I personally do. I was born there. Like, I am a Californian.
That's true. California.
Anyway, but the obvious answer to Salt Lake City is higher density. Right.
Yeah.
And you drive around the valley. The valley was actually really well designed by Brigham Young. He just laid it out in a grid and everything makes sense. You need two numbers, where in the valley you are because it's coordinates essentially. And there's a lot of infill, man. There's tons of developable infill stuff. So we see a lot of what's going on right now are mid-rise, 2, 3, 4 acre sites, that a lot of that sort of development. But, where I am, I'm on a third of an acre, I think. But my house is really narrow. It's really shallow front to back. It's long and shallow, right? Mm-hmm. And it's on the front of the lot. So I have this massive backyard. Yeah. And I could build a 2,000 square foot or, single family. I could, as far as multi, if they were to allow for that, I don't even know. But the city I'm in, which is Mill Creek, just outside of Salt Lake, is their ADU. They're pretty restricted. Yeah. The amount of square footage you can build is, there's a lot of restrictions on them. Last I looked, which was probably a year ago. And, because I would do it, and I eventually will do whatever I can. But it sounds like there's a possibility, as I was listening to you, it's like kind of hang on for a few years and maybe this density movement changes the things in Salt Lake City. And we could look at doing that here. Yeah, that would just be massive for us here. As investors on an opportunity level, like that would just, man, that would be huge.
Yeah, and it would be good to do it before it happens and people catch on. Because, of course, now here people are catching on. And so it's anything with a larger lot, it's driving the prices up based not on comps, but on what people know they can build. So it's definitely affecting housing prices here as well. So if you can get ahead of it, I tell you the best thing to do is if you can, talking about the grid, is if you can find large single-family homes, smaller ones on larger lots on alleys, a street with an alley.
So much of that here. There is so much of that here. These big, usually deep lots that aren't super narrow with an alley behind them. Yeah. Oh man, it's all over the place. Yeah. Yeah. Well, that makes sense for parking and access for tenants and whatnot, right? Mm-hmm. So are these? How do these end up as far as entity details? Are these do they end up are they single tax entities, in other words, or do you condoize them? Do you does a single entity own them and rent them? How does that work?
See, a single entity owns them.
Got it.
Exactly. Okay. Yeah, you can't condoize. You can't do vacation rentals. Remember, the concept here really is affordable, and so literally, some of the units end up being deed restricted as affordable housing. Yeah, and federal guidelines and everything. So. Right. It's a bit of it sounds kind of cheesy, but doing well while doing good. I love it. Providing affordable housing.
I love that. That's not cheesy. That's beautiful in my book. Yeah, seriously, like that is doing the right thing in the housing industry. So what does affordable house? What does that look like? What are the just a thumbnail version of the restrictions, I guess.
Yeah. So remember, we're talking about San Diego County. So just like you're talking about the mountains, and I see it's beautiful to see Utah back there. I've been to Salt Lake City, and it's a beautiful place. Mm-hmm. And we also have mountains to the east. We have Mexico to the south.
Yeah.
Camp Pendleton, where I was based. Ura to the north.
Right. And that takes up a huge chunk of land to the north. Huge.
Yeah. And that stops anything there. And then to the west, you have the Pacific Ocean. So we're highly constrained. We're not growing like say Utah is, but we still are growing. And so we're attracting, folks from Northern California, especially a lot. I'm getting a lot of people in from LA and especially the Bay Area, just as you're getting people from the Bay Area, right?
Right.
And then we also have this whole thing with nearshoring. Although the maquiladoras, I don't know if you're familiar with those, but the factories in Tijuana, and even now they're going to the east of Tijuana where they can do assembly and everything and then bring it into the U.S., moving a lot of that from China over to the border between U.S. and Mexico. They have like 1% vacancy in industrial in Tijuana. 1%.
Amazing.
So we're...
Yeah.
Amazing. Yeah, so I think I got off on a tangent. Shoot.
No,
you're asking about entity. You're asking about the entity, right?
Yep, you got it. Yeah. So
okay.
So basically, do the ADUs just go in with the original entity to become part of the original?
I know. Yes. Yeah. So I think I know. So you're talking about rent. So let's just use an example. So right now, I've got a duplex. And the way it works is this duplex, you can now add, because it's in a multifamily zone, you can add 2 units where you just get to add 2 units. They can be 2 1,200 square foot units. Mm-hmm. And then the little method kicks in where you do the bonus, or excuse me, the affordable with the bonus, right? So let's say you do that. And I think there are 3 units that are affordable. So just so you have an idea, for a 1-bedroom, 1-bath in San Diego, this is from the federal government provides this data. The rent for affordable housing is a little over $2,300 a month.
It's unreal.
For moderate income affordability. That's called moderate. Yeah. There's various levels, right? You go down to very low.
So that's considered affordable?
Moderate affordable. Exactly.
Unreal. So that you're building, and that's for a one. So what's the square footage? 1 bedroom, 1 bath.
It doesn't go by square footage. So a lot of times, like in the case of the 10 unit that I'm talking about, the 1 bedrooms are about 500 square feet. But we have some that are as small as 440 square feet.
Yeah. Okay. It's unbelievable, man. I mean, and and cost to build. I mean, it's expensive right now, but when you're talking about rents like that, it's a no-brainer, right?
Yeah, they still pencil. We go in looking at a 5 cap, and the idea is to come out on the back end after, cost, not of a 7 cap to cost.
Yeah, which is
which is nice.
You can't
for here. For here we're still below a 5 cap. Now that could change, but that's what we use for our metrics.
What does it look like to invest with you? So, to me, what I see here, quite frankly, is. For my passive investing friends, obviously there's a lot of different types of opportunity out there. And I'm a huge believer in the larger scale multifam projects. That's what we do, right? We have ongoing multiple opportunities to invest in that type of asset all the time, including right now. So get in touch with me if you guys are looking to deploy some capital, because we've got 3 projects we're working on right now that are super exciting. So what I see here is that you have not just your foot in the door, but you're inside of the door, living in behind the door in this niche that only like people, in my opinion, could you do it from out of state? It seems like it would be, number one, just tough, because it's like you're playing on somebody else's home field at that point. Yeah. Plus, it's probably gotten super competitive. So what I see is, if I'm a listener right now and I've got some cash, I want to invest it either with you, Marcelo, or somebody else, or into a fund that's doing this. So what's it look like to be an investor? How, what kind of returns can I expect? Timelines, et cetera.
Yeah. So up until now, the way I've done it is I'm a GC as well. So we're fairly well vertically integrated. So we'll find the project and we'll work through design to build it and everything. And so typically up until now, I've partnered with people in the local market. So maybe something along the lines of I find it and you fund it, and then I'll go build it and carry the project to completion. Yeah. And so right now I've created a fund, and actually the first project that we're going to put into the fund as a, your typical traditional passive investment 506c fund is actually one where this is just, I doubt this will ever happen again, but the seller provided a lease option with seller finance, and he's also financing the construction at 5%.
Oh my gosh.
Yeah. So he's a retired engineer, got enough money. He's like, I'd just love to see this. This would be cool. I just let me come and drive by and see it. And I was like, okay. So at any rate, so that's going to be the first one that we have that we put in our fund.
Is it going to be a single entity fund, or you're going to do multiple entities with the fund?
Multiple entities. So actually, each project stands alone. So I call it a fund, but each project will be its own standalone. So each investor can come along. Current minimum investment is $50,000, and it's in that project. And then the next project you will invest in that one. You're not investing in an overall like a blind fund. And returns. I mean, I want to just advertise kind of what you typically see is your 20% IRR sort of return, but let's just say that there's real opportunity to have outsized returns for these.
Yeah. And what's the timeline look like?
Under 2 years.
Yeah. That's the key.
Years.
I mean, is if you're interested in a quick, amplify, magnify your wealth, multiply your wealth scenario, where you're in and out, that's as quick as you're going to get in and out of a development project or any sort of commercial deal, right?
Yeah.
That's a value add of any kind. So, now, as passive investor, you need to ask yourself if that serves you, right? Because it's great to get, a 20% IRR, but at that point, if it's a 2-year hold, 3-year hold, whatever, you got to figure out where to go get it again, right? And hopefully Marcelo and probably will have like the next opportunity lined up.
Yes. Yeah.
So, but there's also, there is a, I've been listening to people more recently with more of the long-term, like real long-term buy and hold philosophy on stuff. And so I'm a little influenced by them too. So, but we've got a 2-year project right now in Lawton, Oklahoma. It's a huge, heavy value add. We're putting 25,000 a unit into this thing, and we'll be in and out in 18 months. So hopefully we'll be sold and out of the whole investment in 18 months. And we're hoping that our investors will get about a 2x equity multiple out of that.
Yeah, that's. I mean, I try not to. I'm. How do I say this? I'm probably being a little over cautious, but the equity multiples, obviously for development, are quite high, and we also shoot for more like 18 months, 2 years. So I'm being super conservative here, but
you want to under promise, over deliver.
I want to under promise and over deliver. These things are becoming pretty cookie cutter. So so when the very first project submitted to the city, it took them like 2.5 months just to get it into review. Actually, by California state law, one of the things I left out was actually by law, they're supposed to permit these things in 60 days.
Wow.
So we're not getting anywhere near that. Yeah, but that's not happening.
No, it's not happening. But if it did happen, that would be insane.
However, what happened is the mayor signed an executive order. I want to say it was in February. They hired a bunch of consultants to accelerate this, and we have seen real acceleration in real time of these permits. And now, for us, for California, it's fast, right? For San Diego, but to submit our plans and to be getting comments back in 90 days. So that for us is pretty darn good for development.
Just curious, what do they look like? What do the buildings look like? Are they like row townhomes? What do they look like?
I mean, they can look they can look all different ways.
Kind of whatever works on the piece.
On the piece, we have some standard ones. I call it there's what I call it a 8-pack, which is basically a duplex, which is a upstairs downstairs duplex. They have a slanted roof, so we have well over a 9-foot roof on the top unit.
Oh, that's nice.
It has a 9-foot roof. Yeah, it makes a big difference.
Totally.
And then what we do is we have to separate them, so we don't have to do the fire sprinklers and some other things. We actually put some separation with a firewall between each one. So they're actually standalone duplexes, but they're so close that they look like they're co-joined. And then you can imagine these shaped in an L. It depends. And there's other ones where they actually they're 3 stories. So the bottom unit is just a walk-in unit. And then above it, you have stairs to the next unit, and it's 2 stories.
Yeah, that's like a New York City walk up almost.
Yeah, and it just looks like a standard 3-story mid-rise.
Yeah,
multifamily, but they are these accessory dwelling units. With the accelerated permitting, lots of breaks on permitting cost, all of that stuff. So no parking requirements, but they look like your standard mid-rise type of low-rise, mid-rise type of multifamily.
I think it's brilliant. I really do. I think it's just such a cool thing, the niche you found here. And I think, for passive investors that are looking to diversify into, something that's highly energized or, highly accelerated, if you will, with pretty good upside, like it's really exciting. So, where can listeners go to see what you're doing, get on your investor list? And by the way, listeners, whether you're an operator, syndicator, sponsor, lead GP, co-GP, or, more of an LP and passive investor, you should get on as many of these lists as you can. If you want to email me, I'll send you a list of syndicators that I think have awesome sites that I give to my coaching clients. So Tate at glequitygroup.com. I'll hook you up with that. But I got into that side tangent and lost my train of thought.
Where to reach out?
Yeah, exactly. How to find you and how to see pictures. I mean, do you have a site with examples of what you're up to and that sort of thing?
Yeah. We have a site. I actually have a guide to backyard apartments. So you can get that guide. It's www.thenextwavegroup.com. So the next, next and wave, like surfing. We are in San Diego. Group.com/guide. And they can get that guide. That's actually going to be a living document. I'll be updating it. And I'm actually, I kind of, this is a mission for me. So I want to put together a course that I offer in there as well. So that'll be evergreen. So look up /guide, Nextwave Group /guide, and check it out.
Yeah, perfect. There you go, guys. Marcelo Valdez, this has been awesome. Any important questions or any important aspects of this that I didn't ask about that we should mention before signing off? I guess one logical question is, where's the risk, in this? If you've got a piece of land that qualifies for what you want to do and what the rents are going to be, what could go wrong?
Yeah, I think for development, this is probably one of the least risky ways you could go. And I don't want to come off as saying there's no risk. There's always risk.
Sure. Yeah, absolutely.
In investment.
Yep.
So let's be clear about that. But the guidelines are so straightforward. My due diligence is done in about 3 minutes. It's really crazy. But the city is over giving in the information that they provide. And you can literally do 80 to 90% of your due diligence in about 3 minutes. I've got it wired that quickly. So I think the area where there's probably the most risk right now is in the lending side.
Yeah.
I think that's where lenders are getting a little skittish. And in fact, I've even thought very, very hard about offering an equity portion because of the way my fund is set up. You can be either excuse me, I said equity.
A debt portion. Yeah.
Debt portion. I mean, whereas, and of course, maybe if you're somebody who's actually looking for the income, then that could be a great way. If you're somebody who's got your self-directed 401k or just, you've received a tranche of funds from your RSU or grant vesting or something like that, then you could go on the equity side. But if you're looking for income, I've been thinking, geez, I could offer people 10% return, and that would be a deal for me on the construction lending side right now.
Yeah, that's awesome. Yeah, I mean, lots of ways to there's often multiple profit centers. If you're creative and resourceful and imaginative, and to me, this is. I'm just honestly kind of blown away at how cool a niche you found. And to me, it's like one of the best examples of like finding a niche and just like going for it, becoming an expert in it, doing it. In your case, you're a builder, a contractor, so you know what's up as far as that goes. And you're perfectly situated to do what you're doing, and you're just, you're taking the ball and running with it. So congratulations, Marcelo.
Yeah,
like,
thank you.
I think it's
as
super
we used to
cool.
say in the Marine Corps, over, under, or through.
Right. Yeah, exactly. Yeah. And, that's what it takes in real estate. It's a gritty business, in my opinion.
It is.
But yeah, really appreciate, you being on the show and sharing this opportunity, sharing the idea. And what I'd like to see is this spread, and I'd like to see the idea get out there into not just the rest of California, which probably needs this as much as probably more than anywhere, because just affordability is an issue. But like, I mean, our median house price in Utah is $650,000.
Wow.
So when I'm 5 years ago, it was half of that. 6 years ago, it was half that.
I know.
So affordability is not necessarily a thing in Utah even anymore, which is changing a lot of stuff here, and it's making things really hard on people. And obviously there are a lot of great jobs. So there's a lot of money moving here, and a lot of people buying stuff for cash. And I mean, that's what's you Californians are driving our prices.
I know.
Yeah.
That's why I say everybody loves to hate on the California.
You come in with these all cash offers that sellers can't refuse, and you're willing to pay way more than anybody else. And but I'm being somewhat facetious, but that is a thing going on, and wages. We've got. I think our average median household income is in the 70s, which is like 20-ish more better than the rest of the country, maybe 25. But it's not, the wages are not where they need to be for affordability here yet. So it'll be really interesting to see what happens. And again, I get back to higher density stuff. And what I see here is the key is the mandate on affordability.
Yeah.
Right. Like if we did this here right now at these rent levels, it would absolutely tee off. Like there would be tens of thousands of new housing units. And I think what I love here, and I'll kind of end on this, I'll show my maybe somewhat political colors here. This to me is an example of government doing good things, doing the right thing and addressing a problem and being proactive and making things easier to solve. Right. I mean, this housing problem in California is huge. It's just massive. And this is a great solution. I think it seems like it's going to make a big difference. I mean, are we talking hundreds of units being built right now? Thousands? What do you think?
Of these particular units, I don't even know if it's thousands. So one of the things is that, and I just read housing starts have just dropped off a cliff this year.
Yeah.
So
wow.
We have a state mandate. And I think the word that you're looking for, and I know you said about government doing the right thing, and I think it's a market-based approach. Mm-hmm. There is affordable housing, and you have all the tax credits and the whole thing, and companies have to become experts on how to use all those. And, there's stories here in California of people building affordable housing, and each unit costs like $1 million. I think it was it was somewhere weird like Beverly Hills or somewhere around in that area, but it was like $1 million a unit. And they were like, oh, this is affordable housing.
Right.
So this is a market-based approach, which is good. But right now, and I think a lot of it comes right now to the construction lending side. And this is maybe where maybe it is government or something could step in to help, because we are supposed to be building right now about 14,000 units per year to meet demand. And that has been over the last 10 years and going forward for 10 years. Mm-hmm. And right now we built the housing starts, were right around 2,000 for the first 6 months of the year. Wow. So, and we've never come close. That's why I say there's nothing we can ever do. We'll just never get close enough to it. So that's why I built the fund, because I can just stack these up and start one right after another, after another, after another. We could pop off 10 a year and, not even put a dent in the housing. I'd have to call in 10 more people just like me and train them how to start a fund and how to do all of this in order to even begin to even have any kind of impact. I mean, it really takes a lot to have, we're the 8th or 9th largest city in the country. And so we just need much more than we're getting to. It's really tough.
Right. Well, yeah, again, congrats on figuring all this out, navigating through it and becoming the credible expert on it that you need to be to make it happen and to bring investor funds in and grow people's wealth. And man, I think it's very, very commendable. And so wish you all the best, Marcelo. And let's have you back on in a year and you kind of see how this is going and where you are. I
love that. That'd be great.
Yeah. So listeners, again, it's been Marcelo Valdez and Marcelo, the website again, Nextwave.
www, of course, thenextwavegroup.com/guide is where you can get the guide to backyard apartments.
Perfect. There you go, listeners. So thank you, Marcelo. Awesome stuff. Appreciate you. Listeners, as always, appreciate you guys. Thanks for hanging on and being on this ride with us and taking another step. Love when you guys join us and love hearing from you. And so reach out anytime. I love hearing from you guys. So Tate at glequitygroup.com. I've got a Calendly link. We can consult, talk about our projects, about what you're doing in this space, how we can collaborate, resources I can offer you, directions I can point you, et cetera. I love doing that stuff. So take me up on it, guys. So on that, thank you, everybody, and we'll see you on the next episode. Take care.
This has been The Apartment Gurus with Tate Siemer. If you enjoyed this episode, be sure to subscribe and leave a rating and review on your favorite podcast platform. To contact Tate, go to www.investwithgreenlight.com for access to his investor portal and Calendly link. He loves to hear from you and thanks you for being a valued listener. Just a reminder that you are the guru. See you on the next episode of The Apartment Gurus.